Well, speaking of China, you just heard Harry talk about it. Shanghai comp down 8.5% overnight. Chinese media calling it its own Black Monday. Money manager, economist and author of The Death of Money, Jim Rickards, with me now on the phone. So, Jim, today's losses, Shanghai comp down around 38% from its peak in mid-June. For China to try to mimic a free capitalist system, it's a new notion, as we know, for that government. Is it possible China's government thought it could control more than it can?
Well, the key word there, Deirdre, and you're exactly right, is mimic. The Communist Party thought they could finesse this and control it, but it's turning out that markets have a mind of their own. But then, the empire will strike back. They've got an enormous arsenal of tools they can use to try to fight this bubble. Now, in the end, all bubbles burst, so I expect this will go down 70 or 80% before it runs its course. But bubbles never go down in a straight line. They go down sharply, then they go up, then they go down again. People say buy the dips, then they go up, and then they go down again. They can grind down. Look at the Great Depression. That bubble burst in 1929, but it didn't hit bottom until 1933, down 80%. So this could take multiple years, and there could be rallies in the meantime. They could cut interest rates, cut the reserve requirement, cheapen the yuan, sell their reserves, and use that to prop up markets. There are a lot of things they can do, but this is just going to grind lower.
So, Jim, just to be clear, you do see the Chinese government having more tools in its toolkit. We used to talk about that in the context of the Fed after 2008. But one reason I heard from floor traders actually today that the markets began to turn around 11 a.m. Eastern time was because there was this, let's say, supposition that the Chinese government was going to put something in place that would help global markets. Didn't happen. Some people are telling me that's the reason we closed at current levels. Does that make sense?
Well, it does make sense, and I expect China will do something. They're probably debating it, right now. As I say, there are a number of things they can do. They do have room to, unlike the U.S., because we never raised rates when we should have in 2010. China still has room to cut rates. They've got $3.5 trillion of reserves. That's a lot of dry powder. However, this has implications. It has what the IMF calls spillover effect. If they have to sell the reserves to raise money to bail out the market, what are they selling? They're selling treasuries. That puts upward pressure on U.S. interest rates. Now, the trend in interest rates is probably down because of deflation. But in the short run, this is just going to make the dollar even stronger. And it's going to basically make deflation worse. By the way, everything that's going on in China sort of started with the Fed. The Fed went through this, I call it a kamikaze mission, of talking about raising rates all year. The economy was visibly slowing. Deflation had the upper hand. Why on earth was Janet Yellen talking about raising rates? But as long as China was pegged, that meant our deflation became their deflation. It was killing them. They broke the peg. But then the markets are crashing. So all these things are connected. It's not that China causes our problems. The problems actually started here, went to China, and now they're coming back.
So, Jim, I want to give you a stat that a friend of mine told me this morning. Only 3% of stocks were able to trade in China's market. That was to say during their market day on Monday. So that is to say 97% of Chinese trade was suspended. In other words, risk couldn't be cleared. Knowing the system there as you do, what does that mean to their market? What does it mean to ours?
Well, what it means is it has a lot further to fall, Deirdre. If it went down 8% with almost no trading, imagine what it would have done if the trading had been free. I'm as guilty as anyone of using the word markets. There are no markets left in the world. The last time the U.S. markets represented fundamentals is probably March 2009 at the lows.
That's a great quote, Jim. There are no markets left in the world, meaning there's always a government manipulating the so-called market.
Correct. And I don't know why we throw stones at the Chinese. I look at the Chinese. So what are they doing? Cutting rates, cheapening the currency, printing money, propping up markets. It sounds like the United States.
All right, Jim Rickards, love having you with us. Thank you so much.